GM released their quarterly earnings. They raised their 2023 guidance for the second time this year after the automaker results were up sharply year over year. The Detroit automaker also said it increased its cost-cutting measures through next year and now plans to cut $3 billion in expenditures compared with previous guidance of $2 billion. GM's earnings included an unexpected $792 million charge for new commercial agreements between GM and LG Electronics and LG Energy Solutions. GM is one of those OG. It was part of the big three. I think there's now just a big two, which is the other one is Ford, the other one being Chrysler, which probably got sold to Fiat. Nevertheless, let's get into the charts. Now, this is the monthly chart, and what I like to do is treat the charts as a football field. You can see we have support down at 32. So we're going to say that's one end zone. And then you can see all these wicks, which indicates selling pressure. Now, instead of putting the end zone at, say, 42.50, you see this drop. We've got one basing candle, kind of like a doji, and then another drop. So what I'm going to do is say we have monthly buyers at this level, or monthly sellers at the $45 level. And so the 50-yard line, let's just say it's at 37.50. And so, in football, when you're at the 50-yard line, anything can happen. Case of charts, this is equilibrium, where buyers and sellers are pretty much equal. At the extremes, which is why traders trade the range, you have buyers exceeding sellers, and up here you have sellers exceeding buyers. These are your imbalance levels, in which you usually typically see violent moves. All right, let's go down to the weekly chart, and you can see how price has just been range bound since last April. And so it's tough really to play a range bound market when prices are in the middle. As you can see, there's no direction. There's no trending on the weekly chart. Now, if you get into smaller time frames, you can see a trend. Like, for example, hourly 30-minute trend is up. Hourly 30-minute trend is down. Here's that monthly sellers level. Not in love with the price action. See a big M pattern, which is a bearish price pattern. Typically, when price breaks the trough, price returns to that level and then drops. And you kind of had that. Prices couldn't quite get back there. And when you see these on a higher time frames, very powerful. Just trying to see if there's any levels of interest below the support level. I don't see anything at the moment. Let's go to the daily chart. Now pre-market, price is muted. Okay, price is up 70 cents, so not quite muted. Now what you can see on the daily chart, we're talking about the trend. Pull back. Pull back. Potentially. Potentially. So on the daily chart, you can see prices range bound at the moment. You get a breakout and a close above this range here. Because the daily chart, the trend is up. Look for price to close this gap at 40. But the liquidity, the big boys who probably want to get out of the positions, who got in down there $32, $33. Again, who wants to get out of the positions need liquidity to get out of the positions. So potentially price is going to continue to move higher. However, before price continues to move higher, it needs to deal with this little daily seller's level. Now you can see you got a drop in price of one basic candle and a drop. Price returns, drops. Price holds again, drops. So this level is pretty strong. Now the more touches in the zone, the less likely it is to hold. So be interested in seeing next time price gets up to this level. Nevertheless, the trend is your friend, at least on the daily chart. Go with the trend, wait for a breakout, wait for potential gap close, wait for a reaction when price gets to this daily sellers level at 42.25. Thanks for watching. Subscribe. Please like the video.